Hello and welcome to the NinjaTrader Indicator Warehouse. Today we are going to cover the Risk Manager, the first tool specifically designed to help you minimize your losses and maximize your profits. Minimum risk and maximum profits are the opposite sides of the same coin, and you'll never truly be successful as a trader until you are able to accomplish those two goals. In fact, minimal risk and maximum profit is a missing ingredient to the trading puzzle. Now Risk Manager from Indicator Warehouse helps you minimize your risk and maximize your profit automatically based on your particular account size, making it specifically suited for your own trading needs. Let's take a look at how this fantastic indicator works. To apply the Risk Manager, go to your Indicator tab and find the Risk Manager from your assortment of indicators. Double-click on Risk Manager and click Apply to apply it to your charts. Let's take a look at the different settings available for Risk Manager. There really aren't too many settings, as Risk Manager is a proprietary system and it works based on the size of your account. The first settings have to do with the display and how the Risk Manager is going to look on your chart. You can go with the default colors or choose different colors of your own liking. The order style by default is a limit order. You have the option of choosing from the other order styles, namely a market order, a limit, stop market, or a stop limit order. The risk is by default set to 2% of your account size. And what this does is tell Risk Manager how much you're going to risk on each trade, thereby enabling Risk Manager to calculate the correct number of contracts for your particular account size. You'll also be able to adjust the risk percentage amount within the Risk Manager window as well, so you don't have to adjust it right here if you don't want to. The remainder of the settings are pretty much standard as well. The data, there's not really too much to adjust there. This has to do with your contract. And the visual, again, just has to do with labels and the way that the Risk Manager is displayed on your chart. But the standard stock settings are fine for that. All right, let's close the window. Now, before we actually begin using the Risk Manager, there's one more thing we need to do. We need to make sure that the Risk Manager represents our actual account size. If you're trading on a simulator, you're going to need to set your account size in the simulator. If you're trading a real money account, you'll want to make sure that the Risk Manager is recording the correct account value. Otherwise, it won't function properly. Let me show you how to do that. From the Ninja Control Center panel, you want to go to the Tools on your menu and pull down to Options. If you're trading on a simulator, click the Simulator tab and note that the initial cash size by default is set to $100,000. If you're trading a $100,000 account, then you can leave it as it is. But let's say we're trading a $10,000 account. So we'll want to change that. And we're going to want to click on Reset. Leave the Clear History tab checked. Click OK. Click OK again. And now you're ready to begin using your NinjaTrader Risk Manager. Using the Risk Manager is as simple as the click of a mouse. Going to your Chart Trader tab activates the trading window, and you'll notice that you have a new set of parameters down here which are specifically for the Risk Manager. There's the Set Prices button and the risk percentage button, which by default is set at 2%. And you can adjust it yourself according to your account size and your own risk preferences. So let's say, for instance, that with our $10,000 account, we're going to risk 3% on our trades. So click the Set Prices tabs, and the first click will be for your entry price. So let's say, for instance, that we're going to enter above this high. So that's going to be our entry. Let's say our stop loss is going to be down below this low. Notice that the risk manager automatically computes the amount of risk, and based on our 3% risk for our account size, recommends going long with 2 contracts. The last thing we need to do is click for our profit target. So let's say we're going to look for profit up here when the market retraces back to this old resistance area, and we will have a risk reward of nearly 1.5 times our profit. So within a few clicks of the mouse, you can automatically see what your risk position is, what your optimal account or position size will be, and your risk reward ratio. In most cases, most traders like to see at least 2-to-1 risk reward, 3-to-1 being a more optimal number. This particular trade, the way we have it set up now, is only going to return about 1.5 times to us. So you are able to tell immediately whether or not this trade will be worthwhile to you, and whether you want to take the trade or whether you're going to choose to pass on the trade. In this instance, because we're basically looking at a 1.5-to-1 trade, I would probably pass and wait for the next trading opportunity. Let's see how the risk manager works in a real trade. Okay, let's take a look at the risk manager in action. Here we have the E6 Euro, and we have had a moving average line crossover. So the market has turned slightly more bullish, at least according to our moving averages. And it looks as though we might be getting some support here. So let's use the risk manager to determine what kind of trade we should be looking at here. I'm going to change my risk to 3%. I'm going to risk 3% of my capital on this trade. And I will set up, say, to buy above the high of this bar. I need to set prices. Buy above the high of the bar. We'll cover the trade below the low. And we'll look at perhaps recovering to the more recent high. So Risk Manager tells us, given our account size, that we should go long 4 contracts. And by doing so, we will risk $250 with a potential of making $700, nearly a 3-to-1 trade, certainly a better than a 2-to-1 trade. So, with Risk Manager telling us to take 4 contracts, I will set up to take 4 contracts as the market winds down here, and I will buy 4 contracts. See if the market brings us in, and then I'll set our stop loss orders and our profit orders. Okay, the market has brought us in, so now I'll place our stop order, our protection order, and I'll place our there we are. So we have our profit order, we have our stop loss, and now I can clear the line, and we'll just let this trade advance, and we'll see how we do. We're about 20 minutes into our trade, and we're currently up approximately $500, and so far everything's working out pretty well. It looks as though we're going to be able to find our profit target, but what I want to point out to you is how Risk Manager has helped us capitalize on this trade. For those who are usually onesie, twosie type traders, Risk Manager actually told us that this was a great opportunity to take 4 contracts, thereby doubling or possibly even quadrupling the amount of profit that you would normally take in a position like this without harming your account adversely. Remember, we're only risking 3% of our capital on this trade, but yet we're getting double or quadruple the amount of profit that we would normally get. And believe me, that is the difference between profitable traders and unprofitable traders, knowing when to maximize the profit potential of your position. So Risk Manager, definitely a tool that no trader can afford to be without. And remember, whether you are day trading the E-mini S&P, other futures contracts, or Forex, Indicator Warehouse will help you get more profit from your online trading and technical analysis efforts. Thank you again for joining.